Yes, good morning. It's Monday, February 8th, Super Bowl day plus one. Dr. Bob Flower and your February 8th Master Pattern Report. Okay, so what happened last week? How did we do? Well, we had projected a bottom of somewhere around 1570 on silver. But what happened was the next day we had we saw a sell signal that showed a even further bottom, and we expected a low of somewhere around 1445, which it actually hit there and a little lower, but it broke through that and then recovered back up to around $15, where we think it's going to hold here for a while. But we don't see. We think it's going to break down again to that 1445 level before it bounces back up. We still see some weakness going on here for another maybe month or so. In fact, we may see a low of somewhere down around 1390, 1393. So keep your powder dry on that. I'm going to repeat my my admonition last week. Stay away, unless you're involved in daily trading, stay away from silver for a while. It gets down to in the low 14s, we're buyers, long term. We like it. And if it gets down into the 13, we're bigger buyers. Okay. So again, stay out of the short term. Our S&P call was almost exact to the dollar. We said that would be we're looking at 1061, and that's just about where it hit, a little above 1061 and change. But then it broke down further to we had said that if it breaks there, we thought it would go to 1030 or 1031, and what happened was it broke down below the 1061 to 1044, so it didn't quite hit that second level. But we think that second level, that 1030, may be the true objective here. We think what we're looking at is a bottoming of the S&P, and we're going to pull out of this, but we think it's going to kind of like back and fill type of thing. But we think this week we're going to see one more rundown before it starts back up again. The dollar did strengthen, as we stated, for the reasons that we gave about the euro weakness and the 4 or 5 countries there that are going through some turmoil. And we think that's going to, although we think that may be coming to an end, we still think that there's some issues there that's going to hold the dollar up for a while. Okay, so this week, what are we looking at? We're looking at the S&P. We think it'll be moving down somewhat with move days on today, the 8th, and Wednesday, the 10th. Silver, we think is going to end up down to maybe around a 1450 area, that 1445, then a bounce, maybe, and then test it again, and another bounce. That type of scenario. Okay, so again, watch out for it if you're getting into short-term stuff. Oil looks like it's down, folks, and we're expecting another move along with oil tomorrow, Tuesday, the 9th. So keep an eye on that. So what else is happening with things lately? Okay, well, about 5.1 million mortgage holders will be underwater by mid-June. Now, what that means is that their mortgage will be worth more than the value of their home. An additional 5.1 million over where we're at. So this loss has been estimated by the Budget Analysis Department, analysis of the Budget Department, represents about $750 billion to get that part of real estate and the economy even. And that's not going to, they're certainly not going to come out with that, all right? 3 million more homes will go into foreclosure this year. That's a little rise over last year, because last year was about 2.8. We're looking at 3 million. People are scared, are at best overly concerned, and they're watching their pennies. They're not spending because they don't know what's coming. They don't know what to expect. Businesses are cutting back. They're holding back. They don't know what to expect. The rules, regulations, tax increases, tax credits, rising oil, the cap and trade could conceivably drive utility costs through the roof. People are very, very confused and scared. Add all of this to the fact that there are 6 other national and international areas which can cause a total collapse of the United States system. And by the way, we're going to be posting that on our blog and on our website within the next 3 days, 2 to 3 days. So you can look for these discussion of these 6 plus the real estate issue on our blog and website this week. But given all of this, what's going to happen? Well, what's going to happen is what's already started to happen. China is going to make further demands and start calling the shots for the U.S. In fact, we're calling off espionage investigations into intellectual properties and other secrets against China last week. They demanded that Australia not raise its interest rates. Told them it wasn't being in their interest, and Australia did not raise their interest rates. Consequently, their dollar is turning. All right, so this is the beginning of the final days, folks. Sorry. But without, and we'll get away with this. We'll escape this downturn and maybe even look good for the next 3 or 4 months. But without a major change in fiscal policy by Washington and our individual states, by May of this year, you will see where we are headed with this. It will be ugly with a big, big U involved. Okay? Quickly, Iran. There's a 40% chance Israel is going to hit them by spring. So if you're in the oil market, watch out. You may go from $70 oil to $170 oil overnight. Be careful. It's one market we want to stay away from, regardless of how much the downturn is apparent. Problem with Iran is they believe that the Imam is coming and will protect them. The problem is he is coming, but they're not going to accept him and what he has to say. Just like the Christians are not going to believe what their new leader has to say. Go to our website and our blog for more. Keep your chin up. Keep it above the water. Keep it up there. Watch the Master Pattern Report. Knows all. Goodbye. Have a good week.